Hello everybody, what's going on? So few big updates are coming from SOFI's end. If we will look at the market right now, it seems like everyone is hesitating. We are staring down macroeconomic uncertainty. Talking heads are arguing about whether another rate hike is hiding around the corner, and the average retail investors is playing defense. But if you lift up the hook and look at what is actually happening behind the curtain, a completely different story is unfolding. While the crowd is distracted by the daily noise and macro commentary, the massive institutional players, the true big money, are quietly loading up on SoFi stock. They aren't just dipping their toes, they are executing massive block trades. We just witnessed a staggering $106.8 million dark pool transaction execute right at the end of the session, alongside a wave of multi-million dollar buy order worth 9.6 millions, 8.6 millions, and one another 7.8 millions. The question we have to ask ourselves today isn't just what they are doing, but why are institutional moving hundreds of millions of dollars into this specific growth stock right now, weeks before the Q2 earning call. Let's break down exactly what the big money sees, what the charts are telling, and why this pre earning accumulation could mean a massive shift is coming in SoFi stock. To understand why this is happening, we have to look at the timing. We are rapidly approaching the end of the second quarter. In the institutional world, this is a critical window. Large funds and assets managers are starting their quarterly rebalancing. But here is the catch: insiders and institution knows that the official blackout period is looming. If they want to reposition their portfolio based on how they see the underlying business performing, they have to make their move right now. Think about how SoFi has behaved during Q2 compared to the broader bloated tech sector. While massive mega caps have been stretched to extreme valuations, SoFi has been building a pace. Early in the session, we saw a brief macro driven dip across the market, likely a knee jerk reaction to a few hawkish comments from the central bankers. Some smaller players got shaken out. But look at what happened next. The broader market stabilized on solid economic numbers, with jobless claims matching forecast perfectly and Philly manufacturing showing strong expansion at 10.3. The moment that stability appeared, big money stepped in to absorb the dip. They didn't wait for a cheaper price because they realized the floor was already set. When an institution dropped 106 million into a stock after hours, they aren't looking for a quick day trade. They are front running a fundamental catalyst. The second piece of puzzle lies in the data the shorts are leaving behind. Right now, short interest on the SOFI is hovering at massive 14.82% of the free float. That means there are roughly 187 million shares currently sitting out there shorted. During the recent market volatility, short sellers actually tried to press their advantage, adding hundreds of thousands of shares to their position, betting that macro fear would drag the stock down. Instead, they ran directly into a wall of institutional buying. The massive trading volume pushing 80 million shares in a single session, completely overwhelming the short's pressure. The bears are trapped hoping for a market wide sell off that simply isn't materialized. At the exact same time, look at the option chain. We saw a massive concentration of capital expiring in the money, specifically at the 17.50 strike and below. There were over 18,000 contracts sitting at 17.50 and another 27,000 at $17. When you have that many call option expiring in the money, market makers are forced to head to the secondary market and dark pool to buy up the physical shares to hedge their risk. That creates a powerful compounding effect. Dark pool institutional accumulation combined with mandatory market maker buying creates an absolute pressure cooker for the stock price. Now let's look at the chart because The technicals are confirming exactly what the money flow is doing. Over the last few trading sessions, SOFI has put on an absolute masterclass in technological recovery. We watched the stock test its key support level down at 17.34. In the past, a macro scare might have broken the floor, but this time buyers stepped in, immediately creating a clean, aggressive bounce. From there, the stock didn't just climb, it sliced right through its near term target of 17.89 and actually managed to close above its 13 resistance level for the session, finishing strong at 17.91. More importantly, the stock successfully reclaimed and held its 100-day moving average, which is currently sitting at $17.85. In technical analysis, holding the 100-day moving average as support during a macro dip is a textbook bullish signal. It tells us the long-term upward trend is not only intact, but it is strengthening. And the best part, if you will look at the RSI, it's sitting right around 56. This means the stock is completely neutral. It is not overbought. It is not exhausted. The tank is full. The technical indicators are reset, and the stock has established a pristine launchpad right above key structural support. So the big question here is that what does all this mean as we head into the upcoming week? It means the narrative around SoFi is fundamentally shifting. There were no major analyst upgrades today, and no major news headlines dropped to cause this move. This price action was driven purely by structural supply and demand. The big institutions are looking at the business, looking at the impending Q2 earning date announcement, and deciding that the risk to reward ratio at these levels is too good to pass. Right now, the order book shows that while there are plenty of willing buyers keeping the floor firm, the true overhead resistance doesn't really get heavy until we get up towards the 18.50 to $19 range. All SoFi need right now is a gentle, steady push from its current support levels. Once that momentum ignites and the short sellers are forced to cover their 187 million shares, the runway is completely clear. We are looking at a very clean, incredibly technical path right back into the 20s. The big money has made its opening move. The foundation is set, the trend is our friend, and the stage is officially set for a massive run. So prepare now. With that said, thank you so much for being here. See you next one.